Hi, Kevin Blanch. I want to put a quick video on because I do a lot of ranting and raving about, I believe 401ks are scams. I believe they've been scams from day one. You know, you hand a guy over your money for 50 years, you know, and he promises to give it back. And I've been saying for years, if the government doesn't fuck you out of it, they're gonna, the people that have it. Now they're trying to build laws in to where you can't borrow against your own money, you know, in hardships. Because in the inception, the hardships, you know, they've been out of hand. You know, people, and it's been proven over and over, people will not save for their own retirement. It's not going to happen. There's too many things that happen in a person's lifetime. And it's not the person's fault. I mean, it's a fairy tale to believe you're going to go 50 years and things don't happen. I mean, who's going to make it that far? Number one, between the nuclear radiation and the cancers and freaking all the other bullshit and the violence that's in this country and whatever, divorces, suicide rate, whatever. I mean, there's so many things that come into this. But in the context of a 401k, I want to point something out that a lot of people do not know. And this is how powerful Wall Street has lobbied and how powerful they are. When this thing melted down, I was trading at the time. I was managing a certain endowment at the time. I begged these people. When I see Merrill Lynch fall, I says, look, excuse me, Bear Stearns fall and Lehman fall. I'm like, these other companies have the exact same business model. I'm an ex-Wall Street guy. I was there. I know they're the exact. They're going to crumble. You know, and I did trade derivatives on the downside somewhat. I begged people to hedge portfolios. I managed two different people's endowment in this town that inherited wealth. I mean, mega wealth. Many millions. I begged these morons to at least take some off the table and at least hedge it. In the derivatives market, they refused. They got freaking destroyed. I mean, their biggest holding was inherited, was General Electric. They got crushed on General Electric. You know, it's come back to $20. But if you are putting money in the market, here's what I like to do. Say I've got $1,000 and I want to invest in the market. And this is an old Wall Street freaking trick, and more people are getting onto it too. Okay, so you go buy $1,000, but say you like Apple or say you like some stock. You're not going to get much stock for $1,000, right? Okay, so say I hear people all the time, well, I buy a safe stock. Oh, really? Where's a safe stock? I remember when GE was supposed to be safe. Remember when Tyco was the safe play? Because you have to trust management, you have to trust all these people. There's so many variables you don't know. Can you lose the whole $1,000? Oh, yeah. And if, you know, these companies didn't prove to you, even with the solid companies. Say you had GE and you bought it $50, okay, now it's $20. And you didn't even buy it on margin. You just bought your $1,000. How much is it worth now? People say, oh, is it going to come back? And yeah, if you live long enough. And you watch my last video on waiting your wealth. How much do you have? So what I do, I use the derivative markets. I like to use puts and calls. Now I hedge, you know, this is what I've done for a living. I'm a wealth protection guy. I take people's portfolios and I roll, and it's very complex on how to roll that derivative underneath that high dividend yield stock. Everybody says, oh, you can just buy the high dividend yield stock and buy the put underneath. Oh, there's way more to that because you have the pricing has to be right in order to get the percentages and the numbers right. Do you still have a decent return and you have that total 100% insurance, which that's the name of the game. That's what great hedge funds do. I take my $1,000 and I'll go in the options market and I'll buy calls. Okay, say an instead of stocks trading at $50 and I want to buy it, I'll buy even in the money calls, but I like to buy out of the money calls because I'm a risk taker. I'll take my $1,000 and I'll stretch out, you know, several months or maybe even 5 months, and the longer you stretch out, the more you're going to pay. I'll buy $70 calls, you know, wherever I can find the best bargain on it if I think it's going to make a move. Now, granted, if it doesn't come through, you know, it hangs there at $50, if it goes down, I lose my whole $1,000. But it's better than taking that, which people do in their 401k, okay, and they get cut in half, they lose $10,000. When I've lost $1,000. But when I get it right, I don't make. Say I get it right and that stock goes to 80. I don't make, my $1,000 turns into that really fast. And I'll get more into this subject matter, how we do this, and a straddle is when you play both sides at the same time in the derivatives market, in the options market. You play 50% up, so puts down, calls up. You buy one put, one call at the same time. Now why do you do that? You say, oh, you can't make money? Oh, yeah. I mean, because they work on 100% increments, especially if you're buying out of the money, which I do. I buy way out of the money. Say the stock's trading 50, I'll buy here at 40, buy here at 60. Okay, stocks make violent moves sometimes. That's what you're looking for. You're looking for volatility. We're starting to get volatility back in the market now, so this is starting to become in vogue again. So, boom, say the stock goes down to, gets crushed and goes down to 25 over the next few months. Huge score. Now, you can use different multiples thereof. You know, strikes, 2 up, 1 down, stripes, 2 down, 1 up. But you can use any there for it. But, you know, people buy in the money calls and in the money puts, which I'm not a fan. I'm a big fan, even when I go to the track, I'm a big fan of taking small money and turning it into big money. That's my gig. And the people know me as far as the Derby, Mind That Bird. I won a few $100,000 on a $400 bet. Animal Kingdom, which I'm acquainted with some of the people who are involved with Team Bauer. And I think that's a great story because that horse, number one, came from a mare in Germany. Everyone bought that horse because that mare had never been treated with drugs, ever. And American horses are all drugged up in their bloodlines. And the Brazilian father was a drug-free horse, lightly raced. And, you know, you guys in the UK, you ought to be happy. Grand Motion trains, and I think this horse is the best shot to be with a Triple Crown in a long, long, long time. He's lightly raced. I hope he does it. I have a bunch of money. Speaking of putting small money, I put him on the futures line to win the Derby at 31, but I put a little chump change, because I like to throw a little chump change Hail Marys out there on him winning the Triple Crown. And he was 1,200 to 1 on the futures book, so I hope he wins. I mean, the sport would be great, and I like thoroughbred horse racing, but it, like everything else, it's been ruined by the drugs and, you know, the scamming and the corruption, which is a sad commentary on a great piece of Americana that's been around forever. But stay with me on these subject matter. I'm going to get more of these finance, you know, videos. You know, I want people to be able to understand this so they can, you know, mitigate their losses. The stock market is gambling. Do not kid yourself. It is not there to put your money into a 401k and just slowly grow. And that's what you know, Congress and they try to regulate and just think it's going to go smoothly like that. You're going to live like that. That is a fucking fairy tale, and it will never happen. The stock market is not for the faint of heart. It is gambling. And if you can't handle the gambling part, and I tell people, put it in the bank, even with a small interest rate, and let it grow. Because this game is dangerous. You can wipe out a lot of money and ruin your life in a hurry. You have to have knowledge, you have to babysit it, and you have to be on it. You can't just sit back and let these mutual fund guys got your back because they don't have your back. Kevin Blanch.